What is up, guys? You're welcome back to Trading with Prince, and this is Prince. Here we talk about institutional trading strategies and smart money trading strategies. And today we're going to be talking about 4 factors you could use to enter a market, or 4 factors you should consider before entering a market. You do not just wake up and start buying or selling or something. There are strategies you need to use to enter the market. Okay, so today we're going to be using VIX Volatility 51S to illustrate what I'm talking about today. So the first thing you need to consider when you want to enter a market is the market structure, the direction of the market. Where is the market coming from and where is the market going to? So I'm going to use this as an example for today's video. Currently, the market is on a downtrend. As you can see, the market is on a downtrend. So what does that mean? That means that the entries you would be looking for are just sales entries, because they are all in a downtrend. That's the first thing you need to consider while trading market structure. Then the second thing is the area of demand. In my former video, if you haven't seen that, I talked about order blocks where I talked about breakers and sources when identifying a breaker and when identifying a source. And if you haven't seen the video, I'm going to put the link to this card right now, so you could click on it, go see it, and you could come back to this, because it's when you've seen that you would actually understand what I'm about to talk about. So here we are in a downtrend and the market is selling. How do we know that the market is selling? The market is creating lower highs. That is how you know that the market is selling. And besides, if you look at the general direction of the market, you could see that it's on a sell. It's just there. So back to what I was talking about. The first thing you need to, after identifying your market structure, that's the direction of your market, the next thing you need to consider is your area of demand. So your area of demand is where I talked about the order blocks, the breakers and the source. And because we are on a sell, we are looking out for the source. So as I said before, if you haven't seen the video, you should actually go watch my previous video, and you actually understand what I'm talking about. So we are expecting this market to come and retest this source right here. This is okay, fine. I think I'm making a mistake. Retest this source right here. We're expecting this market to come and retest this source right here. How do I know that this is a source? It's a source because it's the first, this is a reference to my previous video, bullish candle responsible for this downtrend. Now, you should know that there are so many sources you can identify, but not all sources will give birth to a retest. This is where the market retested this source right here. This is also a source. But guess what, guys? It was never retested. So before you enter a market, you need to just follow your strategy. That's where your patience comes in, your skills of patience. You need to keep on identifying the sources till you find one that will actually retest it. When you get a retest, that's what leads you to my third option, which is your entry trigger. Now you go to your lower time frames. Okay, you go to your lower time frame. Give me a second, guys. Okay, yeah, this is what we're looking at. You go to your lower time frame, and this is what my strategy is. This is, as I said, I'm going to give you some of my tips today. So personally, I come down to this lower time frame because you need to know when to enter. So you see this impulse move here. This impulse move confirms your entry. So this is where you enter your market, and it could take you as low as depending on the kind of trader you are. If you want to carry it as low as how much you want to go, depending on the lot size you're using to trade and everything. But personally, I would have actually come out. I'm giving you an example of when I want to just, you know, do a little bit trading for the day. I would actually just come out here, somewhere here. Okay, that's that, and I'm good with that. You know, the forex market doesn't end, so you don't need to be greedy. That's one of the basic rules you need to learn. So depends on how many entries you open, depends on the lot size you're using, and so what, so what not. So yeah. Then the fourth thing I wanted to talk about was your stop loss. If you open a market, for instance, you open your market, you have an entry, an existing entry, and obviously it's not going to, most times it's going to have a little bit correction before it could even obey your entry, unless you want to move in at the impulse. You know, I'm still going to explain what that means in subsequent videos to come. But if you identify your source here, and you know, okay, fine, I'm going to sell, and you sell somewhere here, I would advise that you put your stop loss. Personally, what I would advise is that you put your stop loss here. This is where I would advise you put your stop loss. Why? Because not all strategies, sometimes, as I said to people, I also mentioned this in my first 2 videos, you don't control the market. The market does what it wants to do. What we do is we follow the footsteps of the market. That is why we trade smart money strategies. So if I put my stop loss here and I'm taken out of the market, fine. We look for another entry, guys. We look for another entry. That's why you need to also consider trading psychology, you know, to know how to manage your money. And if your entry is not giving you 1:3 reward ratio, then I don't think you should enter the trade like that. You know, before you make a trade, you have to be very smart about what you're doing, because you're dealing with money. And I don't know how you trade, but I would advise that you actually be considerate about a lot of factors before you enter the market. So back to what I was saying, I would personally put my stop loss here. Even if I know that the market is going to go down like this, I'm still going to put my stop loss, because you don't know, you don't control the market. Even if you know what we do here is higher probability. Even if you already know what's about to happen, you're certain. It hasn't happened yet, so it's not 100% sure. So you have to always put a stop loss, and don't just sacrifice all your funds in one trade. Okay, the market doesn't end. You could have so many other entries. So back to what I was saying about the source. You could have so many sources. Like, look at this. This is also a source, never retested. Okay, this source right here was retested by the one we are using for our example. Let me zoom in a little bit. I intentionally came out so you would actually see what I'm talking about. This source right here was retested here, came down. This one I used for my illustration. This happened on 13th October, and it was retested. Okay, this is the one I used for my illustration. This happened on 15th October, within 15th to 16th of October. Then it was retested on the 19th of October. So what does that mean? This is where your skill of patience comes in. Okay, you need to wait for your strategies to actually fall in line before you could actually make an entry. Okay, guys, before I I end this video, my previous video, someone said that I kept on saying that it's simple, it's easy. And my reply to that is, the thing about anything you do in life is it becomes easier or harder for you depending on the amount of knowledge you've been able to consume on whatever you're doing. So it all depends on how you view things, on how you see things. Okay, so before I go, I would like to say this. If you have anything, any points or anything you want me to talk about, any questions, please do let me know in the comment section, okay? Don't forget to like, subscribe, and push the notification bell, and also share this video. Thanks. I'll see you next week Sunday. Adios.